Welcome, friends. Thanks for tuning in to The Road Home, powered by the Truckers Service Association. This is John Piper. On this show, we were talking fuel. Oil prices have been extremely volatile the last few weeks, and the impact on the pump can be detrimental to your bottom line. I sat down with John Kingston, editor-at-large and market expert with Freightwaves, to break it down. You can also catch video segments of the Road Home podcast now on LinkedIn Live, Twitter, and YouTube. I'll put the links below in the show notes. Take a moment to think of one or two other drivers and share this podcast with them. Be safe and enjoy this month's show. Man, it's a pleasure. You know, you and I have connected at several events. It's been nice, post-pandemic, to get back into travel. You and I ran into each other at the Truckload Carriers Association out in Las Vegas.
Right.
And then again,
ATA, right?
In
Nashville.
Again, the ATA in Nashville. And I know you just came back from another conference. And how's it been to be back on the road?
Oh, it's great. That third conference was actually just one day, and it was just in Manhattan. I'm outside of New York. But still, it was great to go out. It was a little bit out of my normal area. I covered a rail conference presented by Progressive Railroading. So it's good to hear their perspective. And so 3 trips since fall when people started traveling again. No complaints here.
Hey, and I know there's a couple, I think quite a few supply chain experts and executives at trucking companies that might be tuning in, or you might see this on the replay throughout the holiday weekend. Please post in comments. Probably both John and I'll be reviewing those over the next few days. We'd love to answer your questions, get back to you. And it's all about connection. You know, John, you and I were just talking about connecting out in Nashville and Las Vegas. What I've found is there's so much connection right here on LinkedIn and ways we can connect socially through technology. Have you found that to be some useful tools as well?
Yeah, I can't keep track of everything that we've been able to connect with. But, you're starting to see a little bit of a pushback, I think, and people are saying that, they want to get into the office, they want to meet with people, and there's a limitation on just how much Zoom can do. So the technology is great there as a fallback. And I remember, I'm going to date myself here, almost 30 years ago when I was putting out a daily newsletter that covered the oil industry. I put together kind of a backup system in case we got snowed in New York and couldn't get to the office.
Right.
And it took a lot of work. And then we got a test where we actually got a really sort of crushing snow, and my quote-unquote systems worked. But they only worked in part because I had somebody in Houston that clearly wasn't getting a lot of snow who was able to step in. But I still think we're going to go to a hybrid point of view or a hybrid system. And I will say that I feel sorry for a lot of young people who aren't going to get it to spend a lot of time in the office. I know that sounds counterintuitive, but I worked for what is now S&P Global and what was McGraw-Hill for 32 and a half years. I made a lot of friends. Had a lot of fun times in the office. And remember, I had to commute on the Long Island Railroad to get there. So that would drive you crazy too. But boy, there's just nothing like in person and hanging around your colleagues and telling funny stories. I do feel for young people who are going to lose out on that.
Well, John, I'm broadcasting from the studio right here in Denton, Texas, just about 30 miles north of Dallas and Fort Worth, Texas, right in the heart of I wouldn't call it the oil patch, but, the oil and gas industry, definitely right. a lot of focus here in Texas. And we mentioned as we started the show, about 53 million folks will be out on the roads this weekend traveling. So first and foremost, we want to remind everybody to be safe out there. No distracted driving, no texting and driving. Man, it'd be awesome to have a very safe weekend. We know that's not always possible, unfortunately, but let's talk a little bit about fuel, John. You're a market expert, editor-at-large at freightwaves.com. We'll put up the website here shortly, man. You guys are doing some great things for the industry as far as bringing data, big data, your sonar tools. And, I just ran into a guy who's in the construction business, had a big 3/4 ton, it might have even been a 1-ton diesel truck. He had a diesel storage tank on the back, does a lot of work out in the field. And I asked him, actually this morning, I said, what have you been paying for diesel lately? He said, about $3.40, $3.50. But he said back in January, not too many months ago, Now, this might have been a promotion, John, but he paid $1.60 a gallon for diesel.
That sounds a little low.
That was at a Sam's Club. Now, it may have been some kind of bonus dollar, but he did say $1.60 a gallon at a Sam's Club.
Not in January. I mean, he clearly got a break, or his memory, failing him. The number that still matters the most for the trucking industry is that weekly DOE EIA number that comes out every Monday. This year it just went down for the first time in 9 weeks. It had a 9-week streak of increases. Earlier this year, it had a 20-week streak of increases, which was the largest ever. It's been significantly higher this year. If you want, I can look it right up on a spreadsheet while I keep talking here. If that's okay with you.
Oh yeah. It's all about the data.
I can walk and chew gum at the same time.
Yeah, that's awesome. If you want to grab some information.
So it's been significantly higher. So has crude. Diesel has strengthened more than crude over the course of the year. But there are some signs that we might be getting near a peak. The U.S. is not an island. The U.S. is part of a global oil market. And the big agencies that do these long-range forecasts on supply and demand, after a year of supply, which kind of went into 2021, supply was exceeding demand. By the end of the year, it's significantly different than that. Demand is exceeding supply. And when you look at the forecast for the world into the first half of 2022, they're good news if you're a diesel buyer, because all the forecasts are showing that supply is going to start to increase. Demand is probably going to soften a little bit, maybe not go down, but the rate of increase is going to stabilize. So there are some signals that we might be getting near kind of, a peak. And let me just note that I just looked at that DOE number, and it was more around 260 at the start of the year rather than 160. So he might have had a number off, one digit off. So anyway, so there may be relief in sight for beleaguered diesel users. I will say what's really interesting to me, I go back, I remember when I was a young reporter in Danville, Virginia in the spring of 1979, and there was a kind of the diesel price was spiking then, and there was like a trucker strike to protest it. What's really interesting is that, diesel is not creating a massive upheaval in the trucking industry. And I think that's because the diesel surcharge, the fuel surcharge has allowed that higher diesel price to be handed down to the shippers. And the independent owner-operators who really don't necessarily work on quite such a surcharge, they're clearly able to get rates that are covering their cost of diesel. So I think, in the past, if you would have seen an increase in the price of diesel this much and this fast, you really would be looking at massive problems in the trucking industry. And we just finished the third quarter earnings season, where earnings numbers came out for the third quarter, and the analyst calls took place. And what's fascinating is to listen to them, and you're just not hearing people say, no, well, things would be a lot better off if it wasn't for the price of diesel. As it is, even the best fleets are still probably running 10, 11% of their miles empty. And those, you can't put a surcharge on those, right? You got to pay those yourselves. But as high as they are, they're just not creating the kind of problems that they would have maybe 40, 50 years ago.
Hey, John, I would like to bring up a sonar chart, the ULSD chart. Unless you talked a little bit about that. I know it's all about the big data. And, we talk about it all the time. I've been in the transportation tech sector for 25 years, and I've never seen in the last probably 24 months, and you probably agree with this, John, so much technology. I know you guys report at freightwaves.com a lot on the freight tech sector, so much technology and so much information available now to make better decisions. And that's one thing you guys do there at Freightwaves. So I'll bring that chart up right now, and you can talk to that, the ULSD rack price.
Right. So what I want to do, this is a price in Sonar, which is our data dashboard. It's the national average wholesale price, and in the industry, wholesale prices are known as the rack, for ultra low sulfur diesel. And ultra low sulfur diesel is the diesel that you have to put in your trucks. It is the vast majority of diesel in this country now. There's still some high sulfur stuff out there, but not as much. It is frustrating to drivers, I know, if they hear that the commodity price of oil is dropping and they're not seeing it being done on the retail level. There's a kind of a line, up like a rocket, down like a feather. And the problem is occurring at the retail level. The oil prices, Exxon and Shell and Chevron, whatever, they only set the price of diesel at a wholesale level. Even the retailers who are flying, let's say, the Chevron flag, they're operating under the Chevron banner, they set their own prices. And the reason I had you pull up this this chart is to show you that the wholesale prices being set by the oil companies do react to the broader market. As you can see, to the left side, we've got, kind of the end of in October. This is a 1 month chart. And the price, the commodity price of diesel, the commodity price of crude has fallen pretty significantly in the last month. Since November 1st, the price of ultra-low sulfur diesel on the CME commodity exchange is down more than 4%. You can see on this chart that the wholesale numbers are coming down. Now, that doesn't mean that the retail numbers are coming down. And John, you want to put up that next chart?
Yeah, John, let me bring that up for the audience there. Okay. And thanks for providing us a lot of great information that Sonar provides. But here's the next chart we'll share with the audience, the retail to wholesale fuel spread.
Right. So this is a very simple chart. It's exactly what it says it is. We take the price of retail diesel that we have in another chart, and then we take that and we subtract the wholesale price from it, and we get this chart. So when you see the price rising like this, or I shouldn't say the price rising, but the spread rising, what that means is that the retailers are kind of, quite frankly, hanging on to their prices, and they're not reflecting not reflecting most of the cuts that they're getting in their wholesale numbers. Now you'll see that in recent days, the last couple of days, it has definitely started to drop. A retailer will try to keep, if he gets a lower priced load and buys at the wholesale level, he's going to try to keep his retail number up as high as he can for as long as he can. But if the guy down the street gets a cheaper load and says, hey, you know what, I want to grab some market share by cutting my price, well, the higher price guy is going to have to match. So it's a very much a real hand-to-hand combat out on the street. The joke in the industry is that to know what the price at, all you need is a ladder and a pair of binoculars, so you can look down the street at what your competitor is doing. And so I think that the price of diesel has remained at the retail levels remained relatively high, even as the commodity prices come down. That's reflected in that spread. But the past couple of days, it definitely has come down. It can't go up forever. At a certain point, it will kind of return to the norm, which tends to be about $1.05, where the retail price, which includes taxes, of course, the retail price is about $1.05 above the wholesale price. But that's certainly not set in stone. And the volatility in that chart shows that.
Hey, John, we're getting some live comments. It's a powerful thing about doing live video. We're getting some feedback. Rick Larkin from BCB Transport, just south of us here in Mansfield, Texas, had a question about, renegotiating fuel surcharges. What are you hearing in the industry and with your travels, how, executives, owners at trucking companies, fuel desk managers can perhaps renegotiate fuel surcharges during this very volatile market?
I'm going to be honest and tell you that I'm not familiar with that. That's interesting. I know that the formulas that have been in place have generally been in place for a long time. I don't know. I would think that the people who would be screaming would not necessarily be in the trucking business because, as I mentioned earlier, if the diesel fuel surcharges were causing a problem for this industry, I think you would have heard it in the earnings calls. Analysts would have asked about it more for the publicly traded companies. I think that if you would have any resistance or have any push to change them, they'd be coming from the shippers because the fuel surcharge basically takes the price of that diesel and pushes it down to the shipper. They're the ones who've been paying the higher prices for the most part. So I've not heard anything. That doesn't mean to say that nothing's going on, but I think any kind of push to change things would have to come from the shipping side.
Hey, John, I did do a poll, and I just put the poll out there yesterday. I've already had quite a bit of respondents. I just put out there, do you think the price of fuel will go up or down over the next 90 days? 73% do chime in and do believe that fuel will continue to rise. What are your thoughts?
I don't really see it. I know that usually when the price is at its highest and ever you do some kind of poll like that, people think it's going to go on forever. I'll go back to these models of the first half of next year. And let's face it, next year is 6 weeks away, so that show increasing supply, shows a little tempering of demand. The fourth quarter is always the year always the quarter in which your supply demand deficit tends to be at its worst in terms of for the customer's perspective. The first quarter and then especially the second quarter, usually you find where supply is outstripping demand. So I would say that I don't really see the case for significantly higher prices. I will say two other things. To me, the strongest argument that prices might continue to rise would actually be a continued increase in the price of natural gas in Europe and other parts of the world. The reason being that natural gas is used as heavily as it's a heating fuel. It's also a generating fuel to make electricity. And if you continue to get these crazy prices in Europe and other places of natural gas, you could start to see people use more diesel fuel. Diesel is a distillate, and as is heating oil. So you could start to see them use more distillate fuel to heat, maybe to generate electricity because the price of natural gas is so high. That is the one thing that would really concern me about being a factor for driving up the price of oil. There's another factor in the market that has very much been playing a role in this decline in November, and that's the strength of the dollar. Oil is priced in dollars, and when the value of the dollar goes up, it inevitably pushes the price of oil down. And this is why I don't want to get political here, but I know when during the Trump administration, President Trump often talked about the benefits of a weak dollar because it makes some manufacturers more competitive. Well, that may be true, but it's also terrible for oil prices in terms of from the consuming side. If you want to keep oil prices down, you don't want the dollar to go down either. So the dollar has been very strong in the last month. That has definitely put a downward pressure on the price of oil. And I think what you want to do is watch that dollar. The value of the dollar in the last month has just been tremendous.
Well, John, hey, great segue. You mentioned neither one of us want to get in a deep political discussion. However, the news just on yesterday, that the Biden administration will release 50 million barrels from the Strategic Petroleum Reserve, SPR, for those folks that follow the commodity space. Can you talk a little bit about that? Now, what I've read, that's only like 2.5 days of U.S. supply. So will that 50 million barrels make much of a dent in pricing at all?
Well, think of it mostly as 50 million barrels being put into inventory. Even if nobody bids on this, because the government can't put it into the market unless somebody bids on it. But even if nobody bids on it, essentially you've taken 50 million barrels and you put it into available public inventory. That's really what matters more than whether it gets consumed or not. The fact of the matter is that inventories have been pretty tight. Crude inventories at Cushing, Oklahoma, which is the main delivery point in the U.S., have been very low. These inventories will not be in Cushing, but to me, the value of them doesn't necessarily come in counting the number of barrels of consumption that it will cover. It really is just the added amount of oil in inventory. Remember, commodity economics are driven by inventory economics to a very large degree. And if you have tight inventories, you're going to have a high price. If you have more bountiful inventories, that should put downward pressure on the price. So even if they don't sell a single barrel from this, which is entirely possible, the fact is that they did put this oil into inventory, available to the general oil market, and that's what counts.
Now, I would like to talk, a lot of the audience that I try to reach, John, when I first got in trucking in 1994, I worked nights and weekends. I was interfacing with a professional driver, and very near and dear to me is the professional truck driver all over the world. You and I probably wouldn't be talking about trucking right now if it wasn't for the driver. So, a lot of times there's a lag, when they're paying, filling up their tank, especially an independent contractor, filling up their tanks, when there is a spike in fuel versus what they're getting paid, and that maybe sometimes that 30-day lag before they get their revenue hits their bank account. Are you hearing much from large trucking companies or even associations that manage independent contractors on how that's impacting their cash flow? Does that kind of hit you guys there at Freightwaves? Is that on your all's radar?
No, and not because we're not looking, but this is what I was saying before, that the silence on diesel prices from various trucking groups is really astounding. And I think that they probably found a pretty good way to push this down onto shippers. Meanwhile, if you listen in on analyst calls after quarterly earnings of some of the big shippers in this country, they talk a lot about how much the cost of freight is hurting them. And the cost of freight is obviously not just the cost of a truck or a rail, but it's the cost of the fuel in there. So it seems to me that the industry has done a pretty good job of taking their fuel bill and stuffing it into somebody else, which, bravo for them.
Yeah, we're seeing, prices going up virtually across the board. I know some local small business owners that some of their costs, even small restaurants, the price of cups and plastics and everything have sometimes more than doubled in the last 6 months, and they can't always pass that along. There's only so much you can charge for a pastrami sandwich. Here in
I know.
Texas.
I mean, it's kind of a strange market, strange economy. The word came out today that the number of new jobless claims fell to its lowest level since 1969. Think about that.
Wow.
1969. And of course, back then, that was a much smaller population. I mean, right now, we're 330 million people in this country. In 1969, we were probably around 190. Okay, so you have gone up by a factor of, 60, 70% in terms of population, and you've got that small number of jobless claims. So, this is sometimes, unfortunately, what happens with a booming economy. I know that every poll shows people think out there the economy stinks. It's really kind of hard to make that case. And let's get back to what we're talking about. I've always felt that so many people measure how bad inflation is, how bad or good the economy is by the price of gasoline. And, if the price of gasoline is high, they start to think that the world is coming to an end. And, of course, the fact of the matter is, you go back to, let's say, the collapse in price in fall of 2008. Oil hit its all-time high on July 3rd, 2008, and, collapsed in the first 6 months after that. The price of gasoline was suddenly very low. Well, I don't think anybody said that was a sign of a good economy. It was a sign of a terrible economy. So the price of gasoline being this high is frustrating, certainly for people who have to fill up their cars or their trucks, or price of diesel into trucks. But it is ultimately a sign of a rebounding economy, and sometimes that just happens to come along with it.
Well, John, man, it's been a pleasure, to connect with you. And you have any business travel plans the balance of this year? We're rolling into December. Any business travel?
I noticed that the TCA meeting had always been held generally in March. And in fact, I was at the one in Orlando in the first week of March 2020, right? Little did we know what was ahead of us, though there were starting to be some signs. And then they moved the 2021 meeting to Las Vegas in September, where we saw each other. And I noticed they moved it back to a March date, and they're back in Las Vegas.
Well, they're trying to keep their same schedule. So is that your next travel? Maybe I'd like TCA in March?
I hope I can get somewhere else first, but
sure.
I do hope that they make that. I really like the TCA meeting. It's a little smaller than ATA, and I just find it kind of a better meeting to have conversations. No knock on the ATA meeting, because I really enjoyed myself in Nashville as well.
Well, you and I are not one of the 53.2 million that'll be traveling for Thanksgiving. I'm staying right here in North Texas, and you're staying local as well. So, hey, I wish you and your...
Okay, except you know what? I just visited. Hey, I'll give a shout out to my Aunt Joyce, who turned 90 yesterday.
Yeah.
I did fly down to Orlando to see her. I flew out on Monday and came back on Tuesday. My guess is I'm in that number. They probably viewed me as a Thanksgiving traveler.
That's true. That is true. That is true. It's hard to capture all that data, but
right.
Well, John, it's been a pleasure. Everyone that tuned in today, thank you so much here on the special Thanksgiving edition. And John, I'm going to put a little Thanksgiving, really a lot to be thankful for, a lot of gratitude. So I've got their happy Thanksgiving and safe travels. John, I look forward to connecting with you again throughout the year, and appreciate the partnership with freightwaves.com and just the collaboration that we all have to really make this industry better. It's a great industry. And again, thank you so much, John.
Have a great Thanksgiving, you, John, and everybody else.
All right, man. Take care.
Take care.
Thanks for tuning in to The Road Home. This is brought to you by the Truckers Service Association. With over 12,000 independent contractors, there is power in numbers. To learn more about all the services available from TSA, check out tsatruck.org. The show is edited by Kyle Rogers, hosted by John Piper, and available the first Wednesday of every month on Apple Podcast, Spreaker, Google Podcast, and iHeartRadio. Safe travels, and thanks for all you do.